Good morning, everybody. It's Tuesday, December 26th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop those in the comment section, and we'll be happy to get those during the show. You can also reach out to us at info@agyield.com. No overnight markets here today. We do have outside markets with the Dow up about 18. Crude oil was trading about $1 higher here before we got onto the show. Guys, hope everybody had a nice Christmas. Wanted to start out this morning. We were looking at some weather in South America. Basically you can get anything you want from a number of different folks and weather folks, but by all estimations, it appears that we're still sitting pretty good, out forward in terms of expected rains. We also, this morning, there overnight during Christmas, there was a couple of retaliatory attacks that we put out over in Iraq for Hezbollah, and that has got the energy markets a little bit on edge here this morning. So I'll kick it over to you guys. There's a lot to digest here. We've got Russia. There was a Ukrainian bombed a Russian boat overnight as well. So I'd say more geopolitical type stuff catching the headlines here this morning than really anything grain wise. But kick it over to you, Ben. I think you had some thoughts on that Russian.
We got news over the weekend that with a drone, the Ukrainians had taken out a Russian landing ship. It's a pretty large vessel, 360 feet long, can carry 10 tanks. Up to 340 soldiers. It's to take a beachhead, supplies, troops, ammunition, war equipment. Pretty large score victory for the Ukrainians, and I think this probably puts a little bit of damper on some of the peace talks that have been talking around and to get a ceasefire and get people to back off a little bit. So I think to date, it's probably the largest kind of, if you want to call it a victory for the Ukrainian military. It was attacked with a drone, most likely U.S. technology. So again, this just creates more geopolitical tension. Everyone wants to go to the wheat market when things like this happen. I think it'll be interesting to see how the auction takes place this morning, what people's bias are. We've had a very muted effect in wheat and corn to any sort of headlines coming out of the Black Sea region for going on a pretty long time here. You go back to the last time was when we ran up to 520 in corn and we quickly fell to pieces. And with about half of the big short position covered in wheat, I would think that the response would be somewhat muted as a lot of the shorts there have already been liquidated. So, a big score for Russia or for Ukraine. And I just think it keeps the tension there high for a while. I don't know that it does anything to disrupt grain shipments as Russia has to continue to generate dollars in order to fight and fund this war. So, we'll see how we go on the opening. It doesn't look like a majorly higher opening. I think people want to get their feet underneath them. Typically, the overnight gives a good context for trade, and we didn't have that last night. So having a hard opening is a really good time to sit back and let the market talk to you a little bit, especially when you have something like that happens over a long weekend.
Sure. Dustin, chirping going on that China may be in for some beans end of last week. We didn't see any announcements yet here this morning, but what are you hearing on that front?
Yeah, it makes sense too. I mean, for nearby shipment, we've seen some basis pop there along the river. So there's been a lot of just rumors that China's buying beans out of the Gulf. And we've had a pretty good sized sell-off on the board as well. It's not like we're super competitive with South America when you look out, especially after like February already, for just FOB prices. But one thing I would note, just because we got that COT information on Friday, is that the funds they continued to sell beans. So they went down another 20,500 plus contracts on their net long position for beans. So they're largely net neutral as of Tuesday the 19th. And they bought wheat again. So if you look at just some massive changes. 3-week changes is 50,000 contracts liquidated out of the beans, and then 50,000 shorts liquidated out of the wheat. That really kind of goes to what we've been talking about, is that wheat bean connection. A lot of the sell-off may have been related to a disproportionately large net long fund position, spec long position that was being liquidated. So that's one, kind of check mark on the positive, even if we're getting some favorable rates in South America, is that maybe a lot of that liquidation already kind of came ahead of that. So if we're starting to see some of these real sales coming out of the Gulf, even though we're in a weather market with good weather, that might be just one check mark in the positive. We'll have to see how we open today. The other thing on the COT report was, post first notice, funds had liquidated a ton of corn shorts. Along with that wheat short position, they were liquidating corn shorts. Mustered up a decent sized rally in the March contract back up into the lower 490s. And then we came back down to new contract lows here last week in the March corn. What that was kind of based on, though, looks like they were adding shorts again. In the last week, they've added almost 30,000 fresh positions into their net short corn position. And so they're short about 900 million bushels of corn. That's the managed money funds, that is.
Wow. What and I saw too on Friday after the close and kind of earlier afternoon, they did reopen El Paso. So that's good news out of the South, that we don't have a larger disruption than what was caused already. But
yeah, it was largely a man-made thing, and heavy lobbying from U.S. Commerce opened it back up. So far, not very disruptive.
Yeah, we didn't need that as another deal to look out for. Ryland, quite a bit of livestock news came out last Friday. I know that you had a couple of thoughts there on both cattle and certainly on the hogs as well. And we're going to have a hard open here this morning in those two groups. So what do you got for me?
Well, cattle on feed report came out, I think, pretty close to expectation. I think all eyes are really going to be focused on the placement number. This has been kind of the source of contention for the cattle market just as of late. So, we came out pretty close on feed. DS1 came in at 103. Market was looking for around 102. Placements came in at 98 at 1.87 million head. That was within range of expectation. So I don't think you got too big of a surprise, but you were above the average guess, which is coming in around 96. And marketed came in at 93. The market was looking for 93.3. So we had a little bit of a lower marketing number come out and a bit of a bigger placement. So anytime we see that bigger placement number, usually the market starts to react a little bit more negatively to it. But generally speaking, I think the fact that it was in the realm of expectation shouldn't be leaning too hard to the downside this morning. I think we did absorb some of that on Friday. So, but I think it just stands to reason that we're just not, at least for right now, the market's becoming a little bit nervous about the supply out forward and the current price structure that's on the board. There's definitely, some risk that the prices do continue to erode down here just based on supply. But, on the other hand, we saw cash market really firm last week. I know it was a short and holiday week. Sometimes we get into this, but Packers paid up. We were about $3 higher from the previous week at 171 for live. Weather disruptions, seems like there were some snowstorms in Nebraska. So obviously there was a good reason, I think, for Packers to start becoming more aggressive in those areas. So I think going into this week, that's really going to be the focus. The funds did reduce their positions and are only net long 16,884 contracts. So we could still see that continue with these numbers. There didn't seem to be anything that would make me want to say, my gosh, we need to go run out and go lock in this price right now because we're going lower. I don't think I really got that sentiment from this report. So I expect kind of a choppy trade, definitely a little bit maybe lower, just that's my bias kind of going in. As far as the hog and pig report, been kind of an interesting trade all week. The funds reduced their short position by like almost 10,000 contracts going into this. So I think they were really banking on the fact that we were expecting breeding herd to be reduced pretty considerably. And I think that's, initially what we saw, but there was a bit of the caveat. So with all hog and pig on DS1 came in at 100%. Market was looking for like 99.5, kept for breeding at 97, and marketing's at 100. So all within the range of estimates. But the fact that we were down slightly in the breeding herd, I think suggests that the liquidation, or at least the throttling we've been seeing at breeding stock from some of the bigger commercials, is starting to impact that number. On the other hand, pigs per litter were up 4%. So, I mean, it just in terms of general supply sentiments, next year we're kind of looking more towards possibly a bigger supply than last year, starting off on that foot. So I think that's you've got a little bit of a bullish sentiment with the breeding stock, and then you've got just a little bit more from the replacement side of things. So I kind of came into this neutral, maybe even a little bit on the negative side, but that could be a longer term battle. So I don't want to say that that's all going to get priced in right away. Typically the market will react pretty strongly to these numbers, but I think there's a lot of time for that to prove out and for some of these numbers to get revised down the road. So looking for kind of a neutral and mixed opening in the hogs based off of those numbers. So yeah, that's kind of what I'd be looking to expect for this morning here, Dan. Just a little bit on the negative side, cattle, maybe just on the mixed to neutral side in the hog and pig report.
So I was reading, Ryland, and you brought up the weather system that went through Nebraska. They got quite a good little storm there. I also noticed that a pretty good storm through Iowa. Also the last couple of days. I know we had talked about the lingering drought monitor and some of the dryness that was taking place. We'll have to see, is it the next run, what, how we replenished and what we did there. But my question, Ryland, was more focused on with this mild start to winter, right? I mean, we don't know how we're going to finish, obviously, but what has that done, for cattle, the feeding side? It's, as we bring it back all together in terms of demand and what that looks like.
Right. Well, I mean, generally this time of year, like dressed steer weights will tend to increase, but this year we're seeing a record increase. So like you talk to anybody in these regions that's feeding cattle, it seems like they're just eating like crazy right now. So we've got massive weights. Sometimes what you run into in these conditions is you'll get wet and muddy pens. If you get that kind of wet, that wet weather, snow, sleet, bad winds, freezing temperatures. I mean, death loss tends to go up in some of those regions. Metabolic rates tend to suffer with those kind of conditions, but it has not been an adverse winter at all. And, as far as snowstorms in Nebraska, I mean, like you could do a lot worse, I think, than what they just got. I think it's been pretty mild all around, So, I mean, I would say that that's a product of the weather. Maybe it's a product of the market structure in general, but like I would say it's mostly just has a lot more to do with just the rate of gain right now is just, or at least what we've been seeing has been just through the roof and at a record. We're at record highs for this year as far as steer weights go. So the market really has a lot to deal with, as far as the heavy supply that's out there. But at least from what I'm seeing, that's really one of the more, I'd say, central impacts of this weather that we're seeing.
That's good stuff. Mr. Ben, it's like the olden days, buddy. We got a hard open at 8:30. What's your call this morning?
I think you got to let the auction. I can make a case for higher or lower, right? You can put whatever you want in your mind. Ultimately, the market is going to decide the path. I think the auction continues. We're in a big, going on almost 2 full quarters of a short position in the corn, marking end of the month positions. There could be a bias to want to cover them because they've been beat up so much, but a lot of times you'll see end of the quarter, end of the month, maybe some of your worst pricing in a market that's short and some of your best pricing in a market that's long. We've seen this numerous times going into the end of June. So we have end of quarter, end of year coming up. That becomes a really big risk factor, I think. And then certainly the January report, in my opinion, I think we will see corn yield go higher. I don't have a strong bias for bean yield one way or the other. So I think those two things really stand out as risk points moving forward. And, you know, I think that for corn, that January report becomes sort of peak bearishness. We factor in everything, we've defined our supply, and we'll see where managed money wants to go from there. I was just looking at a commitment of traders, and it looks like it was early August, late July when they flipped to go to a net short position, which they've stayed with, has been highly profitable. They added considerably to it on the roll. So I think that we're going to have to do something to shake it loose, and no one is going to wave a flag when that day finally comes. There's a little bit of, you know, you can build a little bit of constructive ideology around the fact that March made a new low last week and had no follow through, but we're only sitting a few cents above that. So I think you just have to respect the market. You have to look at what your risk tolerances are, and proceed accordingly. You know, in the past few years, we've seen a real preponderance for managed money to want to take the long side of commodities throughout the growing season and take that risk on. And I kind of think that they're going to have something outside to force them from what's been a very, very profitable position with what we perceive as a very undersold grower. So I'm a lot of humility on hard openings.
Yeah, well, we just came into it. We've got corn now trading a little bit higher. We traded lower to start, but we're up a half, 473 1/4. Jam beans are up 4 1/4, 1304 in the quarter, and March Chicago wheat's up a half at 616 3/4. Just one bit of administrative business here as we wrap today. We will have full trading days the rest of the week. Export sales, as I mentioned, will be pushed to Friday, given that we were closed yesterday. Every day at 8:15 Central Time, we'll be streaming live on X, Facebook Live, and YouTube Live. We appreciate everybody tuning in this morning. We hope everybody had a wonderful Christmas with their families, and we look forward to talking to everybody tomorrow morning. Have a great day.
Thanks, Dan.
Thanks, Dan.